Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 9th of October 2025. My name is Richard Lee and I made the stockradar.com.au website for you. Okay, rule 1, don't lose money. Rule 2, don't lose money. That's a Warren Buffett saying, and I think a lot of good traders would use that. Some like to carry drawdowns, some don't. We don't like to. We use stops. Carrying drawdowns is something you can take at your own peril. Some come back, some don't. So we prefer not take the don'ts. We just make sure we use our stops to keep us safe. So this market at the moment, we've got a crazy market going on, although it's a pretty divergent market. We've really got the banks and the gold, which is really the main strength of our markets at the moment, with a smattering of other stocks. So there's a lot of trouble stocks in the healthcare, industrial materials, energy sector struggling away. Stocks such as CSL, WOW, Woolworths, Woodside, REA, WiseTech, ASX are all struggling quite badly, and things like travel stocks. Okay, so in our world, trend is our friend. Stops are your saviour. Follow the safety of trends. This can be a difficult market or an easy market, depending on how you want to handle it. So it's up to you. You don't need to be overly clever. Just sensibly smart is really what you need to be. Okay, so let's get straight into the trend intensity ratings for you and see what we've got there. As I said before, the market is pretty crazy at the moment. So we've got a little bit of a mixture here. Grain Corp's at the top there, and it's heading towards $9 at the moment. But we've got quite a few other stocks. EVN, Harvey Norman's doing well. Stockradar doing well. And Lucas coming to life, as we saw last week. Capricorn Metals. Mineral Resources is coming back quite nicely. Newmont just continues on, as does NST, Northern Star, which we'll look at later on, and West Gold. So though they're a top 10, there is quite a lot of top 10s there at the moment. And you can see from our metal sector, this is just a picture of our metal sector on the trading centre for you to have a quick look at. And you can just see all the stocks here, all with ratings of 10. A lot of them were ratings of 9. There's many of them. It's a very strong profits coming through on some of these stocks. Lines over 100%. There's some really strong stocks. West Gold 59% very quickly. So there's plenty there in that sector at the moment. So there's a lot of top 10 ratings for you to have a look at, and I said Newmont is one of them at the moment that we're looking at today. It's gone gangbusters. It's had a really good breakout here quite a while ago, and it's just continued to trend very well, and we'll have a quick look at that a bit later on. Okay, then we go to our stock pick count. It's only up 1 this week, so I think we had about 2 in, 1 out, I think. That's about right for this week. So pretty steady, 70 stock picks, 157 stocks here, 2 in, 1 out there. So that's fairly steady. 70 good stock picks there. Plenty for you to pick from there for your portfolios. Okay. So now let's get into the overseas markets. The Dow Jones for a start. It was pretty flat last night. But the trend is still up quite nicely there. The S&P and the Nasdaq, especially the Nasdaq, was very strong last night, kicking out quite well. This has really been a fairly extensive trend we've got through here. A bit like this one here we got through here. We had the break up there before. We've had a good break here. It's pushing higher. Volume is good. Momentum is great. So it's all looking pretty good. And Nasdaq also, a very similar picture. Very strong. Very good volumes running through here, and very positive momentum sector. So as far as following trends go, there's no reason to doubt these trends at the moment. We have to look for other things for us to be wary of, but at the moment all the lights are flashing green on those indices still. And then we get to our market, which has been pretty good, but as I said before, we've had a little bit of, especially the bigger miners, the iron ores have been a bit of a drag, and there's been plenty of other stocks, as I talked about before, big stocks, Woolworths and Woodside, CSL, all weighing pretty heavily on our index. So despite that, we're not doing too badly because the banks have been pushing very high, especially the NAB, Westpac and ANZ. CBA has been a bit steady for a while. It had its gains last year or earlier this year, but the other 3 banks have been going along very nicely and holding this market up quite well. So the ASX 200 is at its highs at the moment. The trend is up. It looks okay. Momentum is positive. It's flattened out a little bit because we've had a little bit of a pullback there, but it all still looks pretty good. Again, this is probably a top 20 index here, really, more than anything. So it hides a lot of the other good stocks in there. Gold, well, like I saw a picture on, was a Bloomberg or something this morning with big queues outside Australian Bullion Company in Sydney. Worries me a little bit. I think we were up $60 again last night. This hasn't been updated, but it's 4,060 I think last night. So gold has really gone crazy, as has silver. So it's really been a wild market. We've got some great volumes going through here. Momentum is great, but it is getting a little bit of a frothy flavour to it at the moment. So because the gains have been enormous. So still follow it. We're just tightening our stops. We've got things like Northern Star, Evolution, Newmont, all in there. But as I said before, we'll make sure we lock in any gains and any pullbacks at the moment. So gold still looks fine. Copper's had a bit of a rally recently, which has been quite encouraging. Nothing really on the volume side there, a little bit there, but nothing to get too excited about. And then of course Brent crude really has been doing very little as well, wallowing down near the lows at the moment. So thus we've got the energy stocks all struggling, especially Woodside, our big leader. Excuse me. So that is the indices. Now we can get to the stocks. Now I don't want to go through a lot of stocks today because it really is, the trends are there for you to follow. We don't need to be too smart about these things. So I'm just going to say some solid trends, why these markets are so strong at the moment, and really just a matter of keeping cool in these sorts of markets. There's a lot of excitement, especially around the gold stocks and things like that, which can distract you from your plan sometimes. And you don't want to do that, so we've got to be a bit careful. So firstly, I just want to look at ANZ. I mean, ANZ's had its own woes on a PR basis, but really it's the money flows that matter, not the news, really. So you can just see money is flowing into this stock. Still pushing it to new highs. ANZ, the ultimate highs are up around here, which is probably around about $37. We've got some good volume going through here. Momentum's fine. So you can see that old high back there. That's the old high there, and here we are heading towards that. So ANZ looks fine. It's pushing up. It's doing well. There's no reason to doubt it. The trend is up. It's above the average. Volume's good. And the momentum's also sound. A little bit of selling there because we've just had a little bit of a pullback there, but nothing really untoward. Just again a healthy pullback, and we're back making new highs again. Then we go straight across to Westpac. Not a dissimilar picture. It's also roaring towards its ultimate highs, which are up here. It's almost right on it at the moment. It's had a roaring rally since probably about this time last year. It's November, $21 to $40, so it's doubled in price. Which doesn't always do, and it's had its days, nasty days, Westpac, but it's having a good run at the moment. It's testing those highs again. Now this is for the ANZ, Westpac and NAB, they're all at cycle highs, so that's, we've got cycle lows and cycle highs. Cycle highs are important, and we can well see a pullback off there, so we've got to be a bit careful. If it goes through, I'm quite excited about it all. NAB's trying to push through at the moment. ANZ is not quite there. Westpac's right on it. So I'm watching these pretty carefully because we could see a pullback, and if that was a pullback there, added to the already weak stocks like WiseTech and things like that, then the market could come off pretty quickly. So just be a bit careful at the moment. The gold stocks are there. There's a couple of big gold stocks like probably Northern Star and Evolution, which are probably the two biggest. They can have some effect, but really they're not going to hold the market up like the banks do. So be careful. The trend is up. The trend is our friend, and we know that. So we've got to make sure we're on the right side of it, and we are long all these banks. They're all rating at 10 at the moment, ANZ, Westpac and NAB. So we're holding them, but we have our stops in place to make sure if there's any retracement off this level here. And if Westpac starts to hesitate around here, we'll be tightening that stop up to make sure we lock in the profit that we have got. So, Westpac still looks good. Volume's okay, momentum's okay, it's above the average. And then we look at NAB. It's actually just put its nose through the highs there. Okay, not only just through the highs, but it is trying to go. We've got some quite good volume here. I can actually push this one up a little bit. NAB is probably the shining star really because it is making new highs just. The volumes have been much better than the other ones, and the momentum is also very good. So again, it's at a cycle high. We're wary of it, but the trend is up. It's in force. And that's the side we're on at the moment. So the banks look interesting. CBA is just hovering at the moment, off its highs of 180. It's around 170, I think. It's had a great run. People have made lots of money on that one there for the moment, but it's just taking a bit of a breather. And the regionals, well, Bank of Queensland's trying. Come off a low point, and Bendigo Bank looks probably interesting as well. Probably worth watching that one around $14, I think it is, because it's nudging that level and giving that a bit of a test at the moment. So that looks quite good as well. Okay, so I also mentioned the gold stocks. They're doing really well. Evolution again, it's had a mighty rally. So probably if you look at 2022, December 2022, it was around $2. It's now up around $11, $12 or $11, $11.28. And even through this year, from September last year, it was $4. It's now $11. So a pretty big rally there. We've had two trades here, one through here. We've now got another one through here with the new highs. Trend intensity rating is 10. Volume is all fantastic on these things. Everything looks good, but we've just got to be careful because gold can get a bit nasty, those commodities. We've got to watch them. So it's really just a matter of following the trend and using your stop, and you will stay safe and we'll keep you safe. So that's really how you play it, rather than worrying about what is going to happen, what might happen, looking at these cues, and probably the taxi drivers are starting to talk about it as well. So, we've got to be a little bit wary of those signs because we know they're dangerous signs. So, just be a little bit careful. And again, Northern Star as well. It did actually had a bit of a stumble there for a while. It came back off from about 22 right back to 16, but it certainly got right back on its bike and moved ahead really well in some fantastic volume. So it's shot higher again. And we've got to move through R1 here, another new high here. So it's had a very, very good performance. This was a little bit of a stumble, but it's all forgotten about now. And it's off, and trend intensity rating is 10 for there. And you can see the volumes there are just fantastic, and momentum really fantastic. So this has really risen from about $16 in July, and it's now around $24. So that's about an $8 rise very, very quickly. So this can happen. And if you're on the right side of them, well and good. There's plenty of stocks out there that have done well. And if I move across another one called Newmont, it's been a steadier rise, this one. We had a nice break back here, and I know I've shown this one a few times, but really the trend is your friend, and you just can't deny that. And we've got lots of stocks in the trading centre that are like this. Okay, this is just an example of a few, but this really has, Newmont really has had 1, 2, 3 weeks down in quite a few weeks here, and it really has gone from $84 to now $133, up again this week. Trend intensity rating of 10. Volumes are all good there. It's all looking healthy, and as is momentum. So again, it's really just sit back, follow it, raise your stop each week, as we do in the trading centre. I just look at this once a week on the weekend. I look at where my stops are and my reversal levels are compared to where the closing price is on Friday, and I respond to that, and then I let it go for the week. And that's really how I do it. It's a stress-free approach, but it works quite well. So we've been long for Newmont for quite some time, which has been great. And we enjoyed that immensely. Now, moving away from the banks and gold, just a couple of quick ones there, just to show that there is a smattering of other stocks out there that are doing really well. APE has done this little Canadian foray, which the market seems to like. Often the overseas ones are a little bit dangerous, as we've known before. But Eagers Automotive really has just rocketed ahead. Trend intensity rating of 10. So it was around about $17 in April, and it's now nearly $34, which is incredible. So that's a doubling in price pretty well in that time. And again, it's just a simple break here. There's nothing complicated about this at all. A simple break high, you buy it with a stop. Not all stocks will do this, but the ones that do, if you get onto these ones, and a few of the portfolio clients have got this in their portfolios, and it's one that's just, and that's why the returns on the homepage are looking so good with some of these stocks, whether it be Linus, Newmont, Eagers Automotive. There's a lot of them are just going ahead so well. So Eagers Automotive, a very, very simple approach. Buy the high, set your stop, follow the trend. Some work, some don't, and we know we manage those out that don't work, and we follow the ones that do, and we raise our stop because we know we can lock in those profits. Okay, so if you find out where the stop is in Eagers Automotive, you need to go to the trading centre and have a good look at it, and I'll tell you exactly where my stop loss is. But again, we can see plenty of good volumes through here. Momentum's great. It's above the average. It's really firing on all pistons. Really, at the matter, the technicals don't matter a lot. It's really a matter of where your stop loss is. That is the most important thing. Okay, so that's Eagers Automotive. Another one which has done a similar sort of thing, not quite similar, same sort of pattern, but still made some pretty good gains. It's now up around 21.50. When it broke up to new highs, back in May of this year, May of 24, I should say. So it's just over about 18 months. This has been rallying from about $14 to $21. So not as big as APE, but still a very, very good rise and very good return. And we can see all the beautiful volumes through here, especially this last move has got really quite exponential, which often happens towards the end of a move. So how far this has got to go, we don't know, but we don't really care. All we do is just keep raising our stop to make sure that we do follow as it goes. And things like APE have just kept going and going, and Linus has just kept going and going and going. And this is what stocks do. It's human emotions that drive it and not necessarily fundamentals. So that's what we're looking for. And so for APE and ALS, they're just two stocks as an example of quite a few stocks. So I've got 70 stocks in there at the moment, and there are plenty of stocks doing similar things to this. Okay, so the simple approach can work quite well. Okay, now the one we've been following a little bit is AGL Energy, and it's an interesting picture, this one still. It's still rating at -7, so it hasn't really to trend intensity, but it has come down a long way. It is rallying quite well, and I note here we saw the big sell-off volume here, which is often peak volume, which means all the retail people are getting out. They've had enough. They're getting out. They sell, and then you find the smart money, the buyers start coming back into these low points, and you can see the nice volume coming through here. So I'm not so concerned about momentum yet. This is really the early stages of a potential turn, but all the signs are good as it's building the way we want it to build. So each week I'll look at this one and we can just follow it and see how it develops. It's got an interesting outlook as things have changed a bit under Cannon Brooks and his effect on the stock. But it did get a little bit overexcited up here. It's come back, it's found support at $8, and it's finding some pretty good buying at the moment. So that's AGL Energy. Okay, so that's all the stocks I've got for you today. There's many, many more we can look at. There's many, many more you can go to the trading centre and see what they're doing. Check out our metals sector because there's some stocks flying through there. And there's always new stocks coming on board. So don't have the fear of missing out. There are always new stocks coming on board that we can get onto. A couple of things that I would think of are things like Mineral Resources and DeLuca, which have really it's just started to reclaim some of their big downtrends that they've had for a while. So they're in the early stages of an uptrend phase. Okay, so that's the stocks I've got for you today. I just want to go through a few slides today. Again, I'm just trying to reinforce in this crazy world at the moment we've got of markets flying all over the place. We can get overly excited, lose our minds, lose our perspective, lose our trade plans, but really it's a matter of focusing on what we do and why we do it. Firstly, I'm going to go into the portfolio update so we can have a look at that. I forgot to do this before. This is just an update on the portfolios, the conservative portfolio that I run, the two Energizer portfolios of 5 and 10 stock Energizers, which anybody can follow. You sign up to the portfolio service and you can follow these portfolios and you can see what they're returning there. And then you can see the two Energizer stocks that I started more recently. One I started about 5 years ago in August 20 and one about 4.5 years ago in March 21. And you can see the returns there jumping through the roof at the moment because of some of the stocks that are in there, whether it be, I'm not too sure what they all are at the moment, Linus and Qantas and Newmont. There's a few stocks in that are all driving these returns pretty well. So that's the portfolios, and you can see they're all doing very, very nicely, all outperforming the accumulation index at the moment. These are our model portfolios which you can follow, or you can start your own if you want to. As we just build from new stocks that come on board, you can build a portfolio of 5 stocks or 10 stocks. Because you never know which stocks are going to be the ones that are going to go through the roof. Who would have thought Linus? Who would have thought APE? Who would have known these stocks were the ones going to do it? So it always surprises you. So we just take them as they come and deal with each stock on its own merits. We use stops, we follow trends. That's how we do it, and we get onto these stocks. Although there might be 70 stock picks there, your portfolios will be a lot smaller. And of course, you don't need 5 big stocks. You only need 1 or 2 to really return in a 5-stock portfolio. So there's the portfolio returns for you. Now, as far as the what I do is I run high conviction portfolios. I focus on the trends. I don't have 20, 30 stock portfolios. I have 5 stock portfolios, 10 stock portfolios. So it's trend conviction. I look for trends and I follow them. Okay, they're very, very focused on that one simple thing of following a trend. Okay, so any sound strategy are underpinned by a systematic process, of which I have a systematic process of identifying trends and following them. Not trying to pick bottoms or tops because that's a very dangerous thing to do, but just jumping on a trend that occurs because we know when trends start, they can go for a long way. So that's all I'm really trying to do. So our strategy is to follow a trend, or if it fails, stop it out. And it happens, and they get stopped out, and we just want to make sure, as I said in the start of it, rule 1, don't lose money, rule 2, don't lose money. So we're always limiting our losses to a certain percentage in any trade we do. So our idea is to hold the strong, hold the trends, and weed out the weak with stops. Okay? So, as I said, this is really, it's like any business. You know, some people say to me, well, can you give me some stocks to buy or sell? So, well, my business is trading stocks. Your business is buying and selling something else or selling something else. You know your business, that's what you need to stick to. So it's a matter of knowing your business, and in this business, it's an income over expenses or trends over losses, over stopped out losses. So our income in any business has always got to be more than expenses. So we bias our outcomes towards following trends and minimising any losses that come along. So it's like a business. We're trying to keep those expenses low and keep the profits running nice and high. So the bias for us, which is what we try and focus on, which is our underlying premise, is the market spends the majority of its time rising. Peter Lynch will tell you every 2 years there's a 10% correction, every 5 or 6 years there is a 25% correction, and that's probably about true. Sometimes they're more than 25%, but it doesn't really matter. They just occur, and then the market goes back up again, and that's how it works. And you can go and look at a chart for as long back as you like, and you'll see exactly that pattern has occurred for years and years and years. And so the market spends most of its time rising. So after having said all that, the thing is, try not to lose perspective on what you're doing. There's crazy times going on at the moment. It's really important to stay focused on what you do. Don't lose perspective. Stay in control, and always use stops, because then you can't lose money. Okay, and if you follow your trends, you will make money. So that's really the underlying basis of what I do. You can take the trial of Stockradar, look at all the trading centre stocks that I'm following. You can follow it for 2 weeks on free basis and see how I move the stops, when I move them, if I move them. One thing about stops is I never move them down. They always stay the same, or they move up. Okay, so that's a very important thing. Okay, so that's really all I've got for today. My disclaimer, my starting page there. So very important to do that. Be very careful in this market. So what I try and do to you is I try and give you a simple approach to trading and managing stocks. This is what Stockradar is about. Managing stocks using price analysis as our tool of choice, with it being the purest and most direct way of observing stock price movement. Okay, relating fundamentals to stock price movement is more of a patient thing, hoping that the stock price will come back towards a fundamental value if the fundamental value is right in the first place. But it's more of a hopeful approach of looking at the fundamentals and wondering where the stock price is in relation to what those fundamentals are and trying to value, which is not such an easy thing to do. Focusing on an actual price and its movement, that actually the thing that we actually trade is the most important thing, and it makes our life a lot easier. So our analysis really consists of observing and identifying a price trend and following it. And as you can see today, there are many trending stocks, many of which extend. Linus and APE being just two simple examples that I've got at the moment. Okay, so as I say, try and keep it simple, keep focused, and you will do okay. It's not hard. It's not rocket science. You don't need to make it overly complicated. So make sure you watch your trends, heed your stops always, keep it simple, have fun, stay safe, and I'll see you all next week for another round, and who knows where we'll be, but it should be a bit of fun. Okay, thanks very much.